Rich Nelson is with Allendale Incorporated. He's based in McHenry, Illinois, and he joins us this morning. I'm Marlon Bowling, your tour guide to your ag commodities, and we're going to take a look at what to expect in today's trade. Rich, when the traders went home Friday, they ended with the grain markets in kind of a flurry to the upside there. It didn't appear overnight like we had any follow-through. What happened there?
Yeah, I think traders were quite a bit surprised to see this moderately important change to the weather maps. In fact, we have taken some of the edge off some of the far deferred weather maps there, and some even actually imply some normal to below normal temperatures, which, gosh darn, is very conducive towards pollination here.
I see overnight on the export wire, we actually had one overnight export sale, and it was for soybeans. It was sold to unknown destinations. That's always kind of intriguing there. 132,000 tons sold for the new crop marketing season for 2018 and 2019. And you know, in the past, I noted where when we had that weekly export sales report the other day from USDA, there were several sales that had been listed as maybe unknown destinations or something, or maybe they had been sold to China in recent weeks, and then they were transferred over or switched to countries like Bangladesh, maybe Pakistan or something. And I had to wonder if maybe that isn't the method being used these days to actually get some soybeans to China through a third party like that.
That's actually a very valid question here, and this new crop sales rate for soybeans is actually pretty darn aggressive. 293 million bushels. That's the best here since, I want to say, about 4 years. So very good pace, and now you're raising up another question about exactly how China could still end up getting beans here, bypassing some type of tariff issue. So that's certainly something we've got to talk about these next few weeks.
So what is the deal? I hear so much talk about this here, Rich, where China has switched more or less, officially at least, over to Brazil or South America for their soybean supplies. I mean, yes, they say they'll buy them from all their neighboring countries, but they don't really produce a lot around that part of the world there. But there's only so many soybeans to go around coming out of Brazil and Argentina there, and you get toward this fall, they're going to have to get them from somewhere, somehow.
That's exactly right. That's a very big question. And we all know in the U.S. side that they will have to rely on us for a portion of the product. The question is really how much. And USDA will answer some of those questions here for us on Thursday. Some of the other questions are about some new policies from China. For instance, carried over from Bloomberg News this morning, we see that a story saying that China will reimburse their buyers for this 25% tariff on U.S. beans from the U.S. So maybe they'll just go ahead and say, well, we're going to buy it from the U.S. anyway, as normally planned, and as long as the government covers us, we'll do it that way.
That's interesting, too. Thanks for pointing that out. Quick look at our overnight trade here. We did have a weaker tone in the grain markets. We had the corn market down roughly 3 or 4 cents overnight, and that's about where we still are this morning. December down 4 3/4. Soybean trade was weaker as well. We had the November contract down 9 3/4 this morning at 8.84 3/4. In the wheat trade in Chicago, we had that, we'll go with September, down 5 3/4 at 509 1/2. And in Kansas City wheat last night, we had the September contract down 5 3/4 at 507 1/4. Even in Minneapolis wheat on September, we were down 4 cents at 554 1/4. The cotton market, I believe, overnight actually had a little bit of a firmer tone. We had December up 62 points. So, Rich, we'll come back in a moment, and we'll talk a little livestock trade on the other side of these messages. Come on back. Rich Nelson rejoins us now. He's from Allendale Incorporated, and we're going to take a look at our livestock trade. And when we actually closed up the session on Friday, we finally shook loose a whole bunch of cash cattle activity. Let's take a look at our livestock summary, Rich. It seemed like we were waiting forever and a day for something to get started last week. Well, they did right at the end of the week. And let's take a look at the cattle market if we could. We had the cash cattle trade actually about $4.50 to $6 higher when the traders had already gone home last week. That's when USDA announced these sales. And they were anywhere from about 111 or so, as high as I'm seeing 113.50 here for a top end, an extreme top on a live basis. And we had thousands and thousands of head that sold at those levels. Were you surprised to see that kind of a rally late in the week there on that cash cattle trade?
we certainly did expect some higher pricing, but nothing like that. So I think in terms of the trade mindset, this does help reinvigorate some thoughts that perhaps, yes, we've got the year's cash cattle low in place, and heck, that might have been, in fact, better than we expected here, certainly by this point going into July. So good rebound there, highest prices seen in quite a few weeks. So great to see maybe some momentum starting to pick up here for the bull side of things on the cattle side.
And it was interesting, that was at a time when the futures trade actually wrapped up lower on Friday, but yet we had a big surge in the cash cattle market. Let's take a look at the wholesale beef trade and see what that did, according to USDA. So the beef cutout values, according to their afternoon report, showed choice cuts down 40 cents. We had select cuts gaining just a penny, so they were fairly flat. The spread all the way down to $9.32. And if you look at the cash hog trade, it looks like on the national livestock summary there, we had the hogs going about 80 cents higher on a live basis. They were about a dime lower on a carcass basis. So it looks like the product value is almost all lower, except the belly's hanging in there with a 97-cent gain once again. Rich, just real quickly, will that have any impact this morning?
I think I certainly will here. A lot of people have pointed out that this packer margin on the beef side has been reduced quite a bit here these past few weeks, and this will continue here, so maybe that's something we have to watch for this week's cash cattle trade. And on the hog side of things here, after multiple weeks of gains for wholesale pork, last week was the first decline we've seen actually since going back to April. So as far as weekly movements there, probably some pressure for the hog side here.
An interesting day and an interesting week. We look forward to it. Thank you, Rich. Appreciate that very much. Rich Nelson of Allendale Incorporated in McHenry, Illinois.